Hi everyone and welcome to Inderes TV. Today here with Aapeli. Hi.
Hi.
We haven't talked about Kalmar for a while, so we're going to talk about Kalmar today.
Okay.
They released their Q4 in mid-February and the revenue was slightly down. How would you summarize the report?
It was quite well in line with the expectations, the operating profit. Of course, the revenue and order intake exceeded the expectations, but overall, maybe neutral to slightly positive. Of course, the guidance was a little cautious, but also the company stated that it's more as a floor level for this year. So overall, quite neutral, slightly positive.
Okay, so more as a floor level, how would you elaborate that?
The company has exceeded the 12% margin level in the previous 2 years.
Mm-hmm.
So, and the starting point for this year was quite stable compared to last year. So, if I remember correctly, last year's margin was 12.6. So there's quite a good momentum going on that I think you can view the guidance as more as indication of a stable environment going forward in the short term.
Okay, so but you also mentioned the word cautious there. Yeah.
So basically, if the company has already exceeded the guidance level in a not a sizable margin, but still clearly in the last 2 years, and the conditions are not that different. I don't know what would be the factors that they wouldn't exceed it also this year.
Okay, so the order intake, so how was it distributed between equipment and service, and how should this affect from an investor's point of view?
The order intake was up double digit in both in equipment and services. So, of course, it's positive that it's widely positive, and in all market areas geographically looking. So it's a positive thing, and also good to remember when talking about Kalmar that their margins in equipment business is quite high compared to some other machine building companies. So of course it's services are a little bit more profitable. So of course that is the and the focus for the company is also there, because that is a significant value driver, but overall positive that both grew significantly from the comparison period.
So that's the take here. Both grew,
and in a geographic look in all market areas.
Market areas. So yeah, that sounds really good. So what does what valuation look at the moment?
It's not unreasonable, even though the earnings growth outlook is quite stable. So we see some upside potential with the multiples, but of course the upside potential is also linked to the earnings growth outlook. So it's like a decent valuation picture, so not unreasonable, some upside, but not yet in the buy zone.
Yeah, so that was my following question. Our current recommendation is accumulate. What more do you need in order to change it to a buy?
Of course, more attractive risk adjust the expected return. But if you're looking at the levels the share was in when we updated, of course, the outlook for the earnings growth, which is related to the market outlook, which is still quite somewhat foggy, you can say.
Yeah.
So clearer turnaround in the market outlook.
Okay. Thank you so much, Aapeli, for all these comments. Read more on inderes.se.